Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. Today we put focus on Sebi's proposal on new asset class. This was notified yesterday. The new asset class is proposed between mutual funds and PMS, and the Sebi's proposal says the new asset class offers greater flexibility, higher risk-taking capability and higher ticket size. To discuss more on this proposal, what it would mean for the industry, we have with us Tarun Birani, the founder and chief executive officer at TBNG Capital Advisors, and Varun Fatehpuria, founder and chief executive officer at Daulat Finvest. And in a little while, we'll also discuss overnight funds and liquid funds with our guests. Tarun and Varun, good afternoon. Thank you so much for joining us today on this show. And, you know, we were going to discuss something else, but we got this overnight update that came by as well. So let's get started and understand what the impact could be here. Tarun, let me start with you first. Do the norms allow enough flexibility to offer higher risk return products? And what's your take on the proposal that has been put forth by Sebi?
Yeah, so good afternoon, Sonal. I think this new regulated asset class is a very welcome development, according to me. And I think as we are observing very high growth happening both in mutual fund and the alternate assets like PMS and AIF, where more than 60 lakh crores is there in MF and more than 10 lakh crores is there in PMS. We are observing that the way the industry is growing, SEBI is looking more from a long-term vision point of view. There is a need for much higher risk products available between the segment of 500 rupees to 50 lakh rupees. And that is the gap which is trying to be filled from this new asset class. Again, it has been observed that there are a lot of non-regulated entities which are playing in the market. So with this introduction of new asset class, I feel it is going to fill that gap, and more funds will come under SEBI ambit. That was one of the I feel is the main criteria. Again, it gives greater flexibility to fund manager to look at asset classes like long short funds, inverse ETFs. There are many sophisticated strategies which can be employed, which cannot be used in the current MF system. But again, due to the MF taxation as well as flexibility to invest with systematic investment products, I think it's going to bring in a lot of welcome stuff. So I it's a great move.
Okay, all right. So it's a great move, and you spoke about the other aspects which mutual funds or AIFs couldn't do. So this new set could do that. Varun, thanks for joining in. First, your take on the question: what do you think would the norms be? How do you look at this proposal? And mutual funds generally talk of 12 to 15% steady CAGR returns over a longer periods. Is there any assessment of what the return profile of such a product could be?
So hi, Sonal. Good afternoon. Thank you for having me back on the show once again. I would allude to what a lot Tarun has already mentioned about this new really investment product and not an asset class, so to speak, that is being proposed by SEBI to fill the gap between mutual funds and PMS. Firstly, I think it talks about the maturity of the Indian retail investor, where over the last 4 to 5 years, especially since COVID, we have seen definitely a surge of participation in the equity markets. And what we have been seeing over the last 12 to 18 months, that there are newer form of investments that are being marketed to these investors, often by unregulated, unregistered investment advisors, and to lure them in a pursuit of higher returns. And obviously, there is a risk attached to that as well. But these people do not have that sort of a risk-taking ability or really a ticket size where they can pursue a PMF or an AIF strategy. And I think that is the gap that SEBI is trying to plug, where they want to offer investors an investment avenue which is a riskier proposition than what an MF would be able to provide, since that's predominantly targeted towards retail investor and the masses of the country, but do it so in a regulated manner, in a segmented risk approach manner, while keeping things under control. So as you talked about, mutual funds as vehicle have been able to deliver returns in that range of about 12 to 15% over the last decade or so, even if you look at just the index. And these are products that are coming that has parallel to, let's say, products that are out there available in Americas or Australia for that matter. That is typically reserved for the institutional investors, but are being launched at a smaller ticket sizes. So definitely higher risk taking. The returns are yet to be seen because we are not really sure with respect to what sort of strategies today will be allowed apart from the couple of strategy which Sebi has already mentioned.
That makes sense. Tarun, coming to you, do you think the 10 lakh investment threshold is fair? And I know it's too early, but do you think the returns here, since the risk-taking capability is higher, could be higher than what mutual funds are offering?
Yeah, I think it is important to keep a minimum ticket size to make sure that more informed as well as investors who have higher risk taking ability only venture into it. If we look into this regulation which they're planning to bring in, I think the idea is to attract more high risk, high yielding products. All those things are they are planning to capture in that. So from a suitability point of view, this is suitable for investors who are highly sophisticated, who understand risk, and who want their portfolio to be much more broad based into strategies which are not available in the current suite. So I feel from a suitability point of view, this makes a lot of sense. But again, I have one point to make here is life is simple. One should not try to overcomplicate, but just to bring in new products, new idea. I have worked with clients with a very high portfolio, big portfolio in pure index and ETF portfolios. So with say 50 crore portfolio also can be managed from a simple index. What happens just to that recency bias creeps in the investor mind, and so many products going on. There is a lot of FOMO right now to invest into something or the other, and that's where investor get trapped into all these things. So though it's a very welcome move, but my advice to investors again would be to look at their suitability, their risk profile, and make a simple portfolio.
That totally makes sense. As you said, there's a lot of FOMO in this market, so anything new that comes up suddenly becomes very attractive as well. So it's important to do your due diligence. Varun, in that case, as Tarun mentioned, people might just look at this new product. Do you think this new product could take away some flows from traditional mutual funds if it actually does get the final approval? Is that a fear in the market?
So actually, I have a bit of a contrarian view where Sebi is trying to put this minimum 10 lakh ticket size, where obviously risk would definitely be a lot under control relative to, let's say, today a lot of the retail investor participation in pure F&A products, doing options, put option, call options, futures, right, which tends to be a lot more on the riskier side, right? So having this 10 lakh rupees ticket size, I don't know how does that really fit in well, because you already have a huge chunk of the country, mostly people into their 20s and 30s, investing into FNOs with a significantly lower ticket size, but a significantly higher risk. So on the risk reward spectrum, it's completely sort of lopsided, so to speak, right? To your point, whether that takes away some of the business from mutual funds, I think, yes, there is some concern with respect to now people wanting to move beyond mutual funds and trying out more exotic products. I think that, again, speaks to the maturity of the Indian investor, where they have got a lot more comfortable with participating in the equity markets. So now they want to look at something which is new, which is something, the flavor of the season, doing long short investing, which is perhaps what is permissible under this new asset class. So it remains to be seen what sort of a strategy do the AMCs actually come up with relative to the risk and the reward compared to more plain vanilla mutual funds.
Okay, all right. Take that point, gentlemen, and thank you so much for your expert advice, because it is still brewing. Of course, there's no finality yet, but these are the initial thoughts on this new category which is proposed by Sebi. We'll do one thing. We'll take a quick break. On the other side, we'll talk about overnight and liquid funds. When should you invest here? What are these funds used for? Stay tuned for that discussion.
PhonePe proudly presents